Alrighty. Doc here from North America. Good morning, good afternoon, good evening. A little late. Didn't realize I was having too much fun outside moving snow. Anyhow, here we are. And here we go. Let's see what we got right there. What do we got? There is the dollar index trading at 103.16. Nothing major. Everything seems to be moving along just the way we expect it to do. Let's get the beta up there. There's beta. Hi, beta. Let's see what beta is looking like this morning. There's the dollar index there. You see just, down a little bit. Right there. You can see that. It's down a little bit. Nothing major going on. No real excitement. What else can we say about the price action? I would say, I guess, Congress passed, which we predicted, was going to be passed, another stopgap measure. One part in March 1st, and the other one, I think, March 8th, maybe? And I was just thinking, when is Super Tuesday? And we're going to go look at Super Tuesday in March. And by then, let me just double check that. Oh, and let's get the chat line up, too. Doing a little quantum mechanics this morning. Also tangled up in that. Between quantum mechanics and moving snow, it's been a fun time this morning. And so, what do we got there? Sun today, solar facts, and space weather. Excellent. I like that. All right. Now, let's go over to the chat line, see if anybody has anything. Like, we've had Storm pop in and Frunzel, and, it's been pretty good there. It's been good action. A little conversation. We're always hunting for a little conversation. And so, you can see the dollar index basically trying to tell us that nothing's going on. It's just kind of quiet. Fans angry, New York show. Oh, what? Material Girl sued for what? 2 hours late. Oh goodness, you guys will sue me one day. Hey Robin, if you have market related questions, feel free to ask. I love that. Any questions at this point. We'll take non-market related questions like loop quantum theory, anything. We'll take it all. So anyhow, you can see here on J4X, it's just been kind of, where's it at? Let's get that mouse again right there. You see it just kind of cruising along. You see it over here on the beta, our beta platform. Same situation, cruising along. Nothing too exciting, I guess you could say. You can see the weekly's been firm now. Last week it went into the buy. This week it's in the buy at the moment. Everything's in a buy. Let's take a look at it on our main platform at the moment, and let's put that up on there like so, and right there we go, clickety doodah, and you can see there. Let's get that mousey going. Where's that? That's this one here, right? Yeah, there we are. There it is right there, and you can see, just there's the live futures contract just kind of just sitting there on the edge of doing nothing. You see it's trying to climb into that weekly buy. Looks like it'll do that today. And let's see what on the beta. I think on J4X. I think it's been in there for 2 full weeks, if not 3. Let's see, like the beta. Let's see where it's right there. No, 2. There it is, 2. Okay, that's cool. We're seeing that strength. It's not anything in, getting nuts, and people don't have to be paranoid like, oh my goodness, what's going on? The markets are doing this, that, or the other thing. It's okay. It's okay. We've got, this is political season now in the United States. Mr. Trump has had a landslide victory in the state of Iowa, and the number one, people would have never guessed what would have been the number one. At least I did. I knew it would be, but I didn't think the rest of the population. And so they're showing, they're showing that the number one problem in our country right now, as far as they're concerned, is the border. And the number 2 problem is the economy. And so that really backs the country into a corner. In other words, it backs the president in a corner, because he has no interest in taking care of the border. And rate cuts. Now again, they're talking 3 rate cuts. Yeah. This is Rubenstein. I mean, he was I can tell you stories about Rubenstein that would make your hair stand up. He runs a merger acquisition firm, and he's a deeply involved Democrat. So he knows. As they always say, follow the money. Follow what Rubenstein is doing, and you will make lots of money. Just follow what he does, and not that goofy guy Kramer on CNBC. I'm talking about somebody that actually does it. Rubenstein is a merger acquisitions company. They're called what is it called? God, I can't think of his Carlyle Group. That's it, the Carlyle Group. And if you follow what they do financially, you make beaucoup money. That means lots of money in Vietnamese. Lots of money. Big time money. Follow Rubenstein, and he was buying glove, test tube companies and mask making companies in 2018 and 2019. And what a great guess that was. The next thing you know, 2020, we need those things. So these guys, they know when to buy. They know when to sell. They are totally wired into the financial political system. He's saying, he's on live right now, he's saying that they're thinking May, June, 3 rate cuts right around there. And that's what I think that's what the dollar index is representing at the moment. That's what we see with the dollar index. Nice. The group is saying on M&A activity in 24. He thinks there's going to be a lot more mergers and acquisitions in 24. Saying there's going to be a lot of mergers and acquisitions. So in other words, they're figuring that what I can interpret that into English. What that means is the Justice Department, he said the Justice Department will allow things through later on in time. So what they'll do is, remember traders, if you want to take something up in price, you want it to go way up in price, first you got to take it down so the people in the know when to buy it so that they can make buku dollars, big time buku dollars. Every time I follow the Carlyle Group, whatever they do makes bingo, big time money. Because they are totally wired into the economic and the political. So, all right, now what else can we say about the dollar? And I think that's exactly what we can say about the dollar, and that is they see the interest rates at this point in time being delayed on the cut. That's what it comes down to. And so that's where we are when we look at the dollar index, and we've been bullish on it, for just a couple of weeks. But at the same time, it's been climbing up for 3 weeks now. It just keeps on finding ways to climb up. And we went into that daily buy back at the end of last year, right there on the beta. Let's see if we can show it to you. We can show it to you on both. You see it right there. That was December 28th. It went into a buy on a daily basis. The fast pushed its little heart forward right there, got into a buy that end of that week, and it's been there ever since. Now the slow, which is the more conservative trading, because traders don't have my work, so you have to you only see a snapshot of it a day here, or if you're a subscriber you see it a couple times a day, and you have a better feel for what's going on. But you can see here there's only been one sell day. One sell day, that's it. Yeah, right there. That was the one sell day. This whole year, it's been in a daily buy, except for the one day. That's it right there. And so, and then, like I said, you can see on the beta, we'll get there again. Where is it at? Where's that mousey at? There it is. And you can see, let's widen this out. And so you can see there, right there, it went into the buy at the end of this week. The end of the week of December, going into January, and that's all it's done is climb, climb, climb. That's all it does. And that's because why, traders? Because the money in the know knew that the rate cuts were not coming in March and February. They're coming in May and June. They want to be 5-6 months out before the election. And here is Rubenstein out in Davos explaining that right now. And I'm telling you again, you want to make money? Follow the Carlyle Group. Follow the money, and you'll make money. All right. Anyhow, that's my rift for the day, I guess you could say. And now let's jump over to, let's see now. Let's go to the euro. Let's see what the euro is up to this morning. Let's see. Where's that mouse? All right. Right. We'll find it in a second. Let's see, right there. There's the euro. You can see that. It's been the leaky one out of the majors. Out of the major currency pairs, the 6 major currency pairs on the earth. It is the leakiest of them all, as far as I can tell. And I can go through that real quick so that you understand what I'm talking about. And that is, the euro is the second most active currency in the world. It's the European Union is the second largest economy in the world. The United States is number 1. European Union number 2. Then you have the Japanese economy, basically the third largest economy in the world, and that's the third most active currency in the world. And then you have the British pound, which is the fourth most active currency in the world, and I believe it's, let's see, so America, European Union. I think you could label the British economy as the fifth. I think it bounces between China and Britain, and then obviously the Commonwealth, helps to perk up the British economy. And then you have the Canadian, one of the greatest resource countries in the world. And then from there you go to the Swiss and the kroner. They're the 6 top currencies in the world. And so basically it's a very productive situation there. I think it goes like the third would be, the battling between China and, it's like a combination. China, Japan, if you take out Germany out of the European Union in a sense, they're all combined together of fighting for that third and fourth position and fifth position type of situation. So anyhow, that's where we are with those currencies. Let's jump over to the next. Oh, and let's put it up over here too, on the old platform. Our main, I guess you could call it our main platform. It's our main platform. The main platform. And let's see, what else can we say about any of that? There it is. You see it's jumped up on the screen there. It's been flatlined. They are adjusting. Markets are adjusting for that. This is what, when we go onto the dollar index, we'll just take a look at it one last time on the where's that mouse at? One last time on the on here. What they've done is they've adjusted for the I guess you could say the stalling, or let's say the delay of lowering rates here in the States for the next 5-6 months. And so that reflects it right there. And I don't expect to see this thing get going much more than that. All right, so there is the euro. You can see the euro starting to calm down. We're even trying to go after a daily buy as we speak. You can see that right there. A little surprised that the weekly is looking still as sloppy as it is. It might just go into a weekly sell, stand around looking at itself for the next week, and then turn around and go back into a buy. That would make sense to me. All right, now let's see, what else can we say? The next thing to go look at is the third euro yen cable. Okay, British pound. Third most active currency in the world. There it is right there. It is the British pound. You can see it's looking much firmer. It started to bounce after going into the sell-off of that, I guess it was. Then you can see it's starting to bounce. And we didn't get into a buy yet. And then yesterday we had a green and a red giving us a warning that they're trying to get some strength in it. It's not. It made a new high today, but you can see our algorithm is starting to pick up now. It picked up on that strength and starting to turn up in here. So with no dot and that through the zero line, that pushes it into a buy. That really does. So, and then you can see the weekly here refuses to surrender. It is not selling down. So you're seeing that strength there in the major currencies, and not really willing to stop. Really, not really willing to stop. It's going to keep on marching and marching and show that strength. So, let's see what that is. Oh, okay. Okay. There we go. So, from there, looking at the cable going on to the next product, we will now go take. Let's see what ding there. I know. Let's check out the phone. Someone's dinging away. Oop, there goes the hat. I was out there playing with the snow and see who is dinging. Ding, ding, ding. Not there. Not there. There we go. All right. Just me to answer that. There we go. And so from there, we go over to the Swiss. And you know what? We didn't put let's put the British pound up on J4X real quick, just to get a flavor of the action there. Right. There it is. Yeah, right there. You can see that. It just kind of stalled out and acting strong. And I don't believe we're going to see much more than that. Again, I think we've seen the adjustment. That's the amazing part. I think we've seen 75, 80%, if not more, 90% of the adjustment for not cutting rates in March. And that's what they represented. And so that's the answer to it all there. All right. Now let's go over and take a look at the Swiss. And there's the Swiss right there on our main screen. Yeah, it's still acting a little weak against the dollar, which is a little surprising because it seems to have been the best pairs trade of all. Let's put it in on here right there. And so there it is right there. It's acting very strong, 86.92. It's come off that low of the 83.33. But it's been a very good pairs trade to pay attention to. And you can see the fast is breaking through with no problem to get into the buy. And you can see here the slow is just on that edge. Just on that edge. It's still, to me, in my head, it's a dead cat bounce still. I see it as a dead cat bounce because the product is really not taking off. And I really don't believe the dollar is like getting ready to go running up to the 107 area, and so I think that will reflect that very well. And so that's really why I refer to it more as a dead cat bounce, because if we're going to just be in a daily buy and not a weekly buy, then I don't have much confidence that it's going to keep on seeing this weakness against the dollar, and that's what we're seeing when the Swiss goes up on a dollar Swiss pairs trade. It's losing against the dollar, and when it's going down, it's gaining against the dollar. So that is pretty much the battle that's going on there. All right, So now, brown cow, we move over to the yen. Let's see what the yen is up to. The yen is, they're really going through a lot of turmoil over there. They're trying to get their game together, and they have all these political problems at the moment, but they'll straighten out. They're a pretty organized society. Right there. You see that? It's made a new high today, but it's pretty much unchanged. See that? They are getting comfortable with the idea that not, February, March, but May, June. Now, I believe the next, not the next, but the May, there's a May Federal Reserve, meeting. And that's where they could lower the rate, and I'm more than likely that'll be the first curve to the whole action. You might see it cut in a quarter percentage point in May, or you may see it or the following meeting. But it definitely is going to be 5 to 6 months before the election. That's for sure. And that is the battle. Let's see, what do we got here? Webinar. Someone's asking me about breakfast. So. From there, we jump over to the yen on GA4X right there. And like I said, you can see it here. You see it there. Kind of somewhat of a surprise that they had this much strength. And you can see, they closed in the weekly. Did they close in that weekly buy last week? No, it just missed it. See, the fast algo on the weekly has been in a buy for, a couple weeks. And this is going to be the third week. But over here, and the daily has been pretty much in a buy. All of this went into a sell like one day, and then that's it. So it's almost identical in many ways. The yen and the dollar index are marching along almost identically. And you can see, matter of fact, it seems like the yen is giving us a really good lead time. Look at that. That's where it went into the daily buy. By the end of that week, it was in the weekly buy for the fast algorithm. And then it has stayed in there except for that one day, just like in the dollar index, where it goes into a sell and then boom in a buy again. So, and then up here it tries to shake it, but it's got a green and a red, so it stays in the buy. So that's pretty much where we're standing. And a lot of times I think we've used, matter of fact, there's a couple of different yen pairs trades we've watched over the years. Oh, it says 45-year experience. Oh, how nice. There is a couple, I think it was the British pound yen, that almost seemed to lead it by a day, which was really fascinating. We had some people always asking for it, and I paid attention to it. Now that they're not asking for it, I don't pay attention to it, because I'm looking at the individual. But, overall, that the yen can be a real good beacon, like a light or a way of following, like the Rubenstein situation. Wherever Carlyle Group goes, it's the place to be. Doesn't matter. Imagine in 2018, they're buying mask and test tube and rubber glove companies. I mean, they knew in 2018, 2019, that was the place to be. And what happened in 2020? They tripled their money. They quadrupled their money. They exploded. So you put out $500 million, and the next thing you know, you walk away with $2 billion. Not bad, eh? So, that's just like the yen, it can lead the stock indices with no problem at all. And I'm sorry, the currency pairs trades with no problem whatsoever. And that's always fascinating. And in some ways, the stock market too. We see that with the stock indices where they dig their heels in. Let's just show you like the euro. Not the euro, the S&P 500. And you can see here, That's right there, and it tries to sell off. It doesn't get going for another week, and now we're starting to lift. We could take a look at the NQs or the Tech 100 and see how that looked to see if it matched up to it. Right there. Yeah, and so there's the end of December, and a couple days later they dig in their heels and they start to climb. And we've always seen the American currencies be about a day or two behind the currency pairs themselves. Currency pairs can be very indicative of where markets are going. And so when they're buying dollars, a lot of times you see strength in the stock market. All right. From there, we go over to the Great Experiment. We'll put that up on the wall here. And there it is right there. And that is the Euro Turkish Lira. And let's see what it looks like over here. There it is. There's the Great Experiment. Trying to lift up a little bit. It's pushing itself into a daily buy today. It's just over there, but it hasn't taken out yesterday's high. And we're looking at an all-time close of, what is it? The all-time close is 33.04. And so we're trading at 32.89. We're only 15 ticks, basically, from the all-time high. So that is part of the game there. Yep. And where else are we now? Let's see. So from the Turkish lira, we'll slide over to the South African rand. Now, we watch the South African rand because it's the largest brick stock in the world. It's the most actively traded brick stock in the world. And second of all, it is a major producer in the metals complex. And so when that currency is gaining against the dollar, gold is gaining against the dollar, silver is gaining against the, platinum, copper is kind of on its own, but more of that the metals gain following it. So I just saw Biden up on the screen saying that someone says Biden is a threat to the democracy. All right, now from there we put in the South African rand right there. You can see it's been pressing up since the middle of basically towards the middle. There's the middle of December, and it's been finding ways to trend up. Okay, now it sold off yesterday and it's starting to lift up again today. So what we do is we go over and check it out here, right there, and you see now it in that middle of December, like right there was the top. I guess like there's the top of December, right in the middle there, and so you can see it's kind of found a way to climb a little bit higher, then fail, and then just keep on sliding. But it's not exactly being punished or knocked down. It's just kind of, it seems like there's a lack of buyers. I think that's the best way to describe it, is just a lack of buyers. So, there's your perfect example of that action. And let's, let me do this. Let me just double check that. Look at the weekly. The weekly is back over the plus line again. Right there, just over it by a hair. And they're showing some strength. And let's go back to the, let me just save that. And then let's take a look at, again, the ZAR. And you can see it right there. There's the South African rand, basically, just kind of lifting up. It fell down yesterday and it was showing strength. Today it's lifting up. You would think, let's go back to the gold. You would think that it would be starting to back off. So this might be this afternoon's work, as we would say in the hedge fund industry. Not now, but this afternoon. Might consider, let's say this, if gold is unchanged towards the end of the day, you would probably want to sell a bear spread on it, to try to trade it into Monday, Tuesday. So because of the way the South African rand is lifting. And that's the way we see that. Now, Let's go over and check out Mr. and Mrs. Silver. And there's silver. Now, silver's been doing that same thing since the middle of December, basically. There's the middle of December. It gave it a little pop and then kept on sliding slowly south. Nothing major. One thing is for sure, it does not like the $26 area. And then at the same time, this is not backing off. We can see that for sure. This is, holding into the weekly sell. So I'm not totally convinced that they're going to be reaching for gold. It's just that I think it's just when you see strength in gold, it just shows you that there's a lack of sellers. That's all. And to me, since it's not exploding, there's no real buyers either. I mean, it's just kind of like a neutral market. It's not overbalanced. It seems to be flat. In the case of silver here this morning, you can see it's just firm, unchanged from yesterday, and the weekly is pushing itself back into the weekly sell. And you see it happen here. It's a really odd situation. Silver is a combination of an industrial metal and a precious metal, and because of that, it has a little different characteristics than gold, where gold is more of just an alternative to dollars. It's a currency alternative itself. All right, and then we slide over to copper. And you can see copper is trying to lift also. And you can see it's 3 weeks in a sell. It's flirting with the daily buy today. It's just a minus 0.0003. Just dropped from 7. Just a little weakness in there still. And now it's 7 again. And back and forth. And so we'll see how well they do. Now we've seen where copper is basically a manifestation of the Chinese market. So we've seen the issues this week with China again, as usual. Not only are they having mass selling in real estate and real estate problems, they're also having problems in what was the other business sector they're starting to have problems in. Their GDP had dropped. It was weaker than they were expecting. They're seeing across the board weakness in many industrial sectors. And the worst one of all is the real estate, where they've just been banging away in bankruptcy everywhere. In government terms, the Chinese government's quasi, I guess you call them non-government agencies, are basically are going minus. So, all right, from there we finish it off with Mr. and Mrs. Platinum, and there's the platinum right there. You see that little strength kicking in again. It went into the weekly sell last week, and I really have a hard time with being short a product like that. It's got down to the 900, got a little bit lower. It drifted down below the $900 area. The low yesterday at one point was in the 80s, like $882 or $83. The day before was in $883, and they bounced it back up. And they're in a weekly sell. Looks like it's staying down there for the time being. You can see the fast stochastic had started to break down and hit the manifold there, and just missed getting into the sell off of this plateau. But within the Monday after, boy, they found a way to get down there. It is a very tough situation. Platinum trading half the price of gold, and so it's I guess it was a great pairs trade for a while. When they were at the same price, and then for years platinum was always a premium to gold, and when you go to buy it even today in a jewelry store, it's still a premium to gold. But on the exchange floor, what they like to call paper gold or paper platinum, or electronic platinum or electronic gold, that's how they refer to it, because it doesn't match the physical market. Just like Robin's a big fan of the silver coins, and it has a 33% premium on them when you're trying to buy the physical compared to the the electronic or the exchange traded product. It's very odd, which tells us that there's a couple different markets out there, which makes no sense. Why there's a diverse market like that is odd. Solely because you would think that physical gold or physical silver or physical platinum would be the same price as the exchange traded, but it's not, because they can't exercise it so freely. And when you can't exercise something that has that European style of exercise, it discounts it. For those that trade the VIX, you find the same situation. The VIX are European options, so you can't basically you can't you just can't deliver it. So in other words, when volatility goes roaring up and the options don't, it's because they're anticipating that it's just going to pare back again. And that's one of the big challenges about European exercise. When you trade anything that can't be exercised, then the derivative gets beat up even worse, because it has like a second cycle inside of it. And that's the same thing we see in platinum and silver and gold. It has like a second. It's the second derivative in an aspect, and it's basically the second derivative in its action. There you go. All right, and that completes the metal adventure. And from the metal adventure, we'll go over to. And traders, remember, if you didn't see something, you just came in, you can ask if you want to see the euro or you want to see, anything, dollar index, whatever, British pound. If you want to see something and you're just coming into the webinar, ask. We'll go back to it. I have no problem doing that whatsoever. All right, now from there we'll go over to the energy sector, and there is crude oil. There you can see it was up higher in the beginning of the day, and it's now towards the lows of the day. It's fighting to get into that weekly buy with no problem at this point. It's above the manifold. And we go over to beta. Let's go take a look at the beta, and we'll put in, where is it at? Is it BZ? Yeah, there's BZ. We'll put in Brent, and there's Brent, and you can see Brent is lower than it was yesterday. We'll put it up over on J4X. Right there, and at the same time we'll put in, there it is, there's Brent right there. As you can see, it's below yesterday's close. It's pressing down. We've been in a daily buy for a bunch of days for this little sideways up action, and we're flirting. Look at that, we're flirting with the weekly sell after 2 weeks in a buy. Went into the buy back in here, and it doesn't seem to, it's not really going anywhere. They're looking at the Red Sea situation. They're looking at the Gaza situation. They're looking at the Pakistan-Iran situation. There's a lot of noise out there, I'd say. That's how we look at it. We call it noise. And with all, the warring going on, and they're shooting at each other, and, all those issues, the metals, the energy sector is really not taking off. I would say probably that's the only reason we're seeing the metals even try to look firm. As we take a sip of our tea, it's the geopolitical situation going on, really. That's what it comes down to. All right, that's the soft buying going on. Now, from there, we go over to nat gas right there. You see natural gas. This is the back month or March. And as you can see there, it's cruising towards $2.33, basically $2.34 a cubic yard, or whatever it is, a cubic foot. And then let me just, I'm just going to take a quick look on the exchange. I want to see, where is it at? Let's go over to the exchange. I want to just double check the front month. Okay, so let's go there, go to futures, and then we go to the nat gas right there. And the front month February is still, it has good volume in it. 15,000, almost 16,000 contracts traded compared to the March that we're watching. The only reason we're watching March at this point is the February has 79,000 open interest. The March that we're watching on our platform has 347,000 contracts trading. And so compared to the 79,000 in the front month, so we've been paying attention to that. And it's been drifting. It was about 55, 60 cents about a week ago. Now the spread between the two has drifted down to 27 cents. It's lost 50% of its premium. And so we're seeing that soft slide that's going on there. And at the same time, we can you can see both, because here is natural gas like Ducoscopy showing the 260 area, just like we have. Let's put it up on the J4X. You'll see they're still following the February contract, and so is our beta. And let's put that in there, right there. So the beta, has it's just the same price tag. And you can see 3 days in a sell, and you can see the weekly is probably heading down. It's trying, just like it is over here. It's trying to put some pressure. So far, not there, and it is Friday, so it probably will survive. Hard to say. It could flip by this afternoon or going into Monday. It could reflect a sell of this week. So we'll keep an eye on that as usual, and we are basically focused on the back month, the March contract for us, and maybe next week, especially with us going into February soon, and that means we're only like 55, 60 days away from spring. It starts to drop the demand. I'm sure you have snow on the ground like we have snow on the ground, but it is coming to the end of the winter. We're halfway, I guess. Let's see, we're a third through the winter at this point. We're almost a third through it. So when you look at the March contract, obviously the March contract is saying, we'll be almost out of the winter. That's pretty much what it's saying. So, all right. From there, we go and take a look at on J4X. We go take a look at the energy company down in Spain. That gives us a flavor of the prices in Europe, and it's matching up with everything else at this point. And where's it at? Right there. Is that it? No, that's not it. Right there. And you can see it right there, trading at 25.64. We've come down from 28.5 over the last, I guess you could say, 2 months. I think we can reflect that more. There it is, right there. So there was the 28s and change, and now we're down to 25s and change. So that just shows the cost of energy is slowly leaking or drifting down. And that's a good thing. And, it's going on, a second year, a full 2 years of the Ukraine situation. And that's kind of, we're getting to a point now where it's not as dire. It's not as dramatic as it was back then. And, the energies and so forth are not pressing that hard, which is nice. Let's see. Alrighty. So from there, we go over to that's pretty much it when it comes to the energies. We've pretty much finished off the energies. And what else can we say about all of that? Let's see. What else can we say? I guess that's about it when it comes to the energies. So let's jump over to now we'll go take a look at the stock indices and see what the planet's doing. And what is fun is, we can see them on our beta, which is really fun. We really enjoy that. All right, so the first one is the S&P 500. There's on the beta. You can see it's perking its head up. It's trying to get into that buy. It's still in a weekly buy. It do not care about the going down. And there it is right there. Same situation. It's a second day on our platform here on our main platform. It's in a buy. Let's show you that right there, pushing up, and the weekly buy is having no problems. And we'll go over here on J4X and do the same thing right there. It's pressing up, showing strength, getting into a buy today, and let's take a look at the weekly on it right there. Should be just a sea of green, basically. See, sea of green, just like ours. Then from there, we'll do this. We'll go put the Tech 100 in there, and you'll see the same thing. A sea of green. They did try to push her into the sell for a week back there. That's true. Let's take a look at it over here. I don't remember if we went into a sell or not. I just don't remember. I don't trade it much. No, it's still in the weekly buy. It had never fallen into it. Let's put it up on the beta. There's the beta. You can see that right there. Same situation. Still in that buy. Tried to push into a sell for a day, and then boom, right back up again. And then let's put the daily on there, like so, right there. Just that one day, putting the pressure on it. And then we go to the grand lady of them all. That's the Dow Jones Industrial Average, where Doc got his name. And there it is right there. See that right there, the strength kicking in today. It had been in a sell for a bunch of days. We go over to here. You'll probably see the same thing, in the sell for a bunch of days. And it's pushing into the buy. And then you can see here the weekly never was able to get into that weekly sell. And then from here, we go over to let's find it, right there. And you can see the same situation there. Ta-da. Went into that sell for a bunch of days, and now it's climbing into the buy. All right. From there, where do we go from there? Now, what we do is we go over to the beta, because the beta has some fun stuff. We have, let's see, what do we have here? We have let's go to the Nikkei. It's like got a 35-year high or something like that. There's the Nikkei, 36-year high, not bad. Going after the all-time high is 39,000. You can see there it's above 36,000 as we speak. You can see we've been in a weekly buy for a good solid 4 weeks. That's pretty cool. Ran from the 33,000-ish, 32 and change area to the 36,000. So winner, chicken dinner to me. And then from there, we go over to the Kospi. I think that's what we look at now. I think we have the Kospi on it. There's the Kospi. I think that's the South Korean one. It's a good solid index. Now it's been selling down, coming off of the almost 2,660 area, and it's trying to make a little bounce as we see right there. Then we drift over to, I think we do to Hong Kong. We do to Hong Kong because it's there to be done. Let's see, where's it at? There's Hong Kong. You see Hong Kong has tried to get going, and they really crushed it. Really bounced it down from the 120 area down to the 95 area. That's pretty dramatic there. And then we go to the Shanghai, I believe it is. Shenzhen, like in the play. And you can see there, China is just, excuse me, just falling apart. Their economy is in tough shape. Real estate market is bankrupt. The businesses in general around are hurting. Actually, the only good thing coming out of China right now is the inflation fighting situation. In other words, they're just selling things to get cash. When you're a company and you have $11 billion in debt, $11 billion in debt, okay, and you have a interest rate payment of $15 million, not billion, $15 million, and you have to declare bankruptcy or default on that tells you how bad the China economy is. It's just like as I say over and over, it's a paper tiger. I just don't see a strong economy there. I don't see a solid industrial base. I see nothing. If it doesn't have America buying from it, they're starving. That's what happens. They starve. Honestly, it's the craziest thing. They're the angriest colony I've ever seen. Can you imagine if Nigeria had been handed $100 billion a year from Britain? They'd love Britain. Or who else? Kenya or Jamaica or any of those colonies that were out there. Australia, New Zealand. If they were handed $100 billion, well, we buy something like we have a deficit of a $350 billion deficit with China. Our socialists here love China, and so they're buying things from them all the time, government-wise. And so we have these enormous debt structure, enormous. So let's see, what do we got going on here? I keep on hearing things ding, 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 and ding. I say, good morning. I am asking for. Okay. And then, so from there, what else can we say about the stock indices? Let's take a look at some of the other stock indices. So unfortunately, that's China. From there, we shoot over to, you know what I'm going to do? I'm going to throw Bitcoin up. Look at Bitcoin. Bitcoin's been having some problems since they've legalized some stuff. I mean, we've seen the product go from 48,000 down to 41,000. It's a big slide there. And, what's curious is I just didn't realize that until this moment, talking about the Shenzhen. Shenzhen is taking that same dip right there. It got crushed from 9,500 to 8,500. A big 10% drop. And they're always in the economic issues. I'm always reminding people of what we read, what we see. How can we measure China? And same thing with that Bitcoin. Bitcoin, now that they've legalized things, it's falling apart there. It's dropped 20%. All right, and from there we go to the FTSE. There's the FTSE. And the FTSE's trying to make a bounce up, which is cool. It's been in a weekly sell for 2 weeks, and they're trying to turn up. You can see the last 2 days. And it fell from the 77.5 area, 7,750 area down to the 74 area. It's a big drop. It's a very big drop. And then from there we go to the DAX. There's the DAX right there. And you see it's trying to make that bounce. Actually, it's in the 3-day buy even. So the DAX is definitely marching better than the FTSE. And you see we're 3 weeks in a sell. Maybe going into next week we'll start to see that weekly buy. Then we go over to, this is the CAC 40 in Paris, getting some other international products up on the screen here, which is kind of cool. 3 weeks in a sell, and it's trying to, they're all doing this little bottoming thing. I think in the not the currencies, but the stock indices, I think they started to realize that they weren't going to have a March, buy. About 3 weeks ago, they were like, I guess, people were trying to tell them there's not going to be 7 cuts. They're just not going to cut 7 times, and they're not going to start in March. And now that they're starting to get a grip on it, and then Rubenstein has basically confirmed it, it's not going to happen until the spring going into the summer. And now they're starting to accept it, and you can see it in the dollar index. You can see it in the... Let's take a look at the bonds. Let's go look at the 30-year bond, too. There's a 30-year bond. Nope, that's Brent. There it is right there. There's the 30-year bond. You can see it's been coming down. When bond prices go down, interest rates are rising. So everybody has gotten a grip on the fact that it's not going to happen. It's starting to show itself. The bond vigilantes are not out there getting nuts. There are just, it's in a sell there for the last 3 days and the last 2 weeks. And as we can show you right here, same situation. It's pressing down and trying to get into that sell. And that's that bounce too. We were talking about it. Maybe. I don't think we'll see a 50% on the from the low to the high of the last 4 months, or it's almost 5 months now. It's all of October and November and December, and now January is coming to an end. So it's almost 4 months. We're probably going to see a 0.38 retracement. Might see. I don't think we'll see a 0.50 whatsoever, because they know that it's still a good return. And the cuts are not coming now, and their interest rates, they trade them smart. That's how interest rate traders trade. They trade smart. So, all right, traders, we're coming to the end here. If anybody has there you go. We got some total retail sales down 0.2%. Let's see what else they're saying there. And let's see what they're doing to the stock market from that. Wait a minute. What did we do? Where is it? There it is right there. I'm going to save that. Save workspace as. Save workspace as right there. Right there. Yeah, there we go. All right, so there it is right there. You can see the stock market. The S&P 500 has run now to almost 40. Now here's that's the longer term intraday. Here's the shorter term, and it's ran up to 40. Was that 41? And that was the numbers came out. The media knew it here. Okay, the media knew it here. Now they're releasing it to the public here, and so you see your first pop, and let's see if they sell it down and make another low. And we've seen how that happens. This is where the media gets the information ahead of time, and they put pressure on it. And now you can see right there, that's where it comes out to the public, and they've given it a lift from that sell-off. Now let's see if it rolls over again, and then we'll get out of here. And it seems to be bouncing back up again. It didn't fall that far. It only fell 6 points, 6 handles. So it wasn't the most ugliest thing in the world. But it does seem to be telling us that the money may sell this right back down again in a few minutes or a few seconds even. So we'll wait and see. You can see our math has pushed it into the intraday buy right there. And our longer term intraday math is telling us the same thing, that it's been in a buy since right there, since the 9 area. So let's see. I don't know. When you see this type of action, you think it's going to find a way to come back down and challenge this low. So I'm watching. And we'll both watch together. And I can give a song, too, at the same time. Reacted to a phone. Yes, I know. Yep. All right. So, traders, it's trying. You can see it's trying to roll over again. And as Giannis would say, basically those days are gone where the fundamentals are working. But sometimes we find the fundamentals productive in their own way. And let's see. Come on. Go down and touch the 35 again and make me feel comfortable. We're at 37 now. And they don't seem to be selling it much. They don't seem to be pushing it down, and it's 3 minutes after. And I'm a little surprised that long. So I guess that's it. All right, traders, we're out of here. We got to come up with a title today, too. I don't even know what to say about today. Anybody have an opinion on what the title should be? Because I'm up for it. Whatever you think the title should be, I'll go with it. We talked about, what did we talk about? We talked about the interest rates again, and how the markets are starting to get used to the idea that they're not going to cut so fast. So I guess we could come up with some type of title that comes up, goes along with that concept that they're not cutting. And then Mr. Rubenstein has confirmed at Davos that they're not going to. What are they not going to do? They're not going to cut until the spring or early summer. Okay, look at that. It's getting there. It's 36.25. Let's see. The early release usually is the way it goes, and that's why. Okay, there's 35.75, That's what we're looking for, to break that 35. And you can see our intraday has gone into a little sell right there. Right there, the intraday. Oh, you can't see that. What am I doing here? There it is. Right there. See, this is where the news came out publicly. Right here. Right there, it came out publicly. They sold it down. Then this is where, I'm sorry, this is where the news of the statistics came out, and they gave it to the press. And then they're not allowed to release it until the public gets it at this spot right there. They popped it up on the news. Now they brought it back down to where they were at, 35.50. And the bigger question is it going to break that and go down? And I say that's what it wants to do, and that's what we're seeing here. Is that it's going to follow this trend. It's going to follow this trend right here, and so we'll see if it can break the 35. Oh yeah, and so as we try to figure out the title, let's go with the title. Title today. Yesterday's title was an interesting one. Euro, Swiss, and dollar pair trades. That was a good, clean understanding of the system there. And let's see. So I don't see any other title, and I don't see any more. Come on, give me my under 35. And so let's see, title. Let's put the title in. And we'll let you just watch for a little bit longer. Title. So what should the title be? How about Davos confirmation cut in the spring? How's that? Interest rate cuts. Davos confirms. That's it. Davos. No, that's not it. Davos. There, just try it one more time. Davos. Confirms interest rate cuts. And say May. No, say June. I say May. There we are. That's going to be the title. All right, traders, we're out of here. Looks like they're still torturing me. We do these webinars trying to show you that the weasels, how they weasel, and it doesn't look like there's any sellers out there. And we're looking at that, and it's every time it tries to go into a sell, it barely goes down to the low and stops and comes back up. So you can watch it, and you won't be able to see our math, but you'll be able to watch it. So this is Doc from North America saying everybody have a safe and smart weekend. And we will catch you all on Monday. So this is Doc saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Arrivederci.